Hey, it's Tim from EminiMind. It's Thursday. Wanted to do an update and run through some trades from today. We'll start with yesterday. So we had the Fed meeting, and yesterday was a good day for the puts. Ended up closing out the puts at the close. Let's get these drawings cleared. So yesterday, I put them on Tuesday at the close because we kind of came up to the 50% retracement here and had a bullish close. So putting it on going into the Fed meeting. Then I just used Monday's expiration, so really short expiration. I didn't really have an opportunity to put them on. I put some on back here, but I'd already taken those off. So I saw it as an opportunity to hedge the Fed meeting announcement, and then I just came back at the close. I didn't even bother paying attention too closely at the announcement itself, and just came back at the close with the intention of if we closed above the 61.8, I was going to close them out for a small loss, and if we close down, I would take off. I was originally going to take off most of them and leave a few on, but I ended up taking them all off because I drew up the retracement like this, and we were pretty close to that halfway point. And we didn't break the uptrend line. Like even though yesterday we closed bearish, I just felt like this uptrend line was holding, and so yeah, we had the kind of spike and then the sell off into the close, but we didn't close at the low, and we hit this trend line at the close, so I just took them all off because the expiration was so short. I didn't want to have to wait until Friday to see if we go lower. So we very well could tomorrow break this trend line and go lower, but I just bought super cheap ones at the money and took the overnight gain and walked away. So that was nice. Today, a nice little 15-minute opening range breakout. This was above the 15-minute candles high. That triggered, stop below the low, boom, 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 got a nice 20 points right off of that one. And then the retracements looking much, much better. So the last couple of weeks, I haven't had a whole lot of retracement trades, but that kind of changed today. So let's go, well, first I'll mark the 30-minute high and low, which I do every morning. First thing I do is look at, okay, where are we opening in relation to the prior day's close? So today we had the gap up, and then if we don't fill that gap, I'll go ahead and bracket the first 15-minute bar. So that looks like this with a buy stop above highs, a sell stop below lows, 20-point target. This one ran from 07 and a quarter up to 27. It was really like a 28 and a quarter is what it needed to get that fill. And so we jump into the 1-minute chart. This is within the first 30-minute range, but the high and low of the first 30-minute range was not marked yet. That would have been here that I actually marked the high of the 30-minute range. So I've got the lines up here kind of ahead of the fact, looking at it in reverse now, or in hindsight. But this was the first little 1-minute retracement long that I took. Actually, I want to clear this. So with Thinkorswim, you can do this cool thing where you can link and unlink your charts. So I want to make sure I have them linked so we can see them next to the retracements. And 30-minute low and 30-minute high. So we pulled back. This was like right after the 15-minute mark, had this little hammer. Notice on the 512 tick chart, we just kind of made a V. So we came straight down with no little swing high to draw our retracement and buy a retracement pullback. So I just bought over the high of the hammer, one tick above highs. That one got a little bit of a run. I had my stop underneath the low here, so I ended up just kind of being a scratch trade, but nice little pull back to the 50, got that nice hammer, and then a little bit of a pop. But the next one that was really nice was, see how the 50% traded up to the negative 23% target? That's this dotted line. And that pulled back to the 50%. We had moved above the 30-minute high. We did not have a high tick at highs. Notice the time, the x-axis. So in Arizona, we do not do daylight savings time. So when I'm here, and it's like this time of year, my charts are on Pacific. And then in the winter, the time would be, would be Mountain Time, and then when I'm in South Dakota for the summers, my charts are also Mountain Time. So this one we pulled back to the 50%, and this had a really nice retracement. We broke the opposing, meaning I'm looking at this as a long here, and I want to draw up the short to make sure that we don't stop right at the short and then trade, kind of between the 250s and bounce around. You can get into trouble if you bounce. You're looking at taking a long, but we stop at the short first. That can be trouble. So we broke that 61.8, as you can see right here, and so then the next move was just drawing the 50% retracement on the 512 after that. Notice we didn't have a little 1 minute hammer over here. Actually, we did, but the pullback did set up. So on a retracement on the 512, the chart on the right, you're going to be able to get a little bit lower, better entry for longs, a lower entry for shorts, a higher entry. You can get a little bit better entry on the retracements, but you don't always get a retracement. So that's where, getting long above the high of the 1 minute candle is nice. It gives you a little bit of extra confirmation, but I like to try and get in on the retracements. That's kind of my bread and butter, and then just have the 1 minute sort of as a backup. And so this one, 4,750, was the entry, and it was just a matter of trailing the next swing, kind of the swing lows on the way up. You can come in here and draw the next retracement like this, and trail the 61.8, and then notice how quickly it starts to run. And so when that happens, let me clear. Well, I'll leave that up. I was just going to say the extension. So this negative 23 belongs to the smaller 512 tick retracement. This negative 23 up here belongs to the larger retracement. So you always want to target the larger retracement. Like the objective here is to identify the support level on the larger time frame. So yeah, it's a 1 minute chart, but it could easily be a 5 minute chart. Okay, so we have a larger retracement drawn up on the 5 minute or the 15 minute, the larger time frame. We identify that there's some support there. We come into the 512, draw the retracement, and then that larger negative 23 is still kind of like the goal to get to that point. So you don't want to just exit at the negative 23 just arbitrarily. You want to try to stay in for a runner. So trailing your stop by the extension is a good place to do that. And then you can move your stop up to the swing low once you break highs. And then the next leg up, you can even come in here, draw the next 61.8, and that looks like that, or the next retracement. Put your stop below the 61.8 because this little micro long on the 512 is getting, it's kind of on top of the larger negative 23 from the 5 minute chart. So as we get closer, if I'm long and we're getting closer to a resistance point, I want to get my stop tightened so that if we're met with resistance at the negative 23 and we pull back, I don't have my stop, way down here, because I don't want to let the market go retrace that far. So getting a little more aggressive with my stop as we come into resistance if I'm long, or as we come into support if I'm short, is kind of the approach I like to take. And so then this one, 4,014 and some change was the 61.8. So if you just round down, so 40.14, and then subtract 2 ticks, that gives you a 40.1350. That's where I place my stop, and gets you out of the trade. So that was an 07 or a it was 0750. Yep, 0750 up to 1350. So a couple of nice little day trades. The 15-minute opening range breakout went for 20 points. So all in all, super great day. Happy to see it after the last 2-ish weeks have been kind of lackluster with retracements. There's been some really good 1 minute trades. We had a couple really good ones on Tuesday in the live trading session, but the retracements on the 512 just kind of been a little bit lacking the last 2 weeks. So I would expect now that we're through the Fed meeting, the next 5-6 weeks, or 5-ish weeks, because 6 weeks will be the next Fed meeting, we should have some really good trading opportunities. So even though we're between these 250s here and here on the daily chart, there's a decent amount of space between them. We're talking like, we just say 3850 up to 4000. So 150 points between these 2 points. And so there can be a lot of good intraday movement. These ranges here, 90 points today. Yesterday's candle over 100 points. Even some of these smaller candles in here, 60 points. So good intraday, good ranges, which makes for good intraday trading. And if you look at today's 15-minute, you can see just how big like the swings have been. We went from here at the open, swung all the way up to that, more than 20 points, came back, went from the top of the 30-minute range to the bottom of the 30-minute range, and then just ripped all the way down and filled the gap. So lots of movement. Should be really good these next couple of weeks. If you have questions, feel free to drop them in the comments below. And I hope you have a great rest of your week. We'll talk to you soon.